All right, guys, welcome back for another video. In today's video, I just want to do strictly price action on Bitcoin and also talk about the monthly close. It's September 1st. We just got a monthly close and monthly open. And there's some important price distinctions going on there. So, right now we have came down and tested the all-time high from 2017. And while that is support, it's not support until you see some type of evidence that buyers are coming into the market at that area and stepping in and providing support, right? Um, Another way to put that is support lines on your chart are just lines until you see the buyers actually step in at that level. And we've seen that happen here. So we have this very obvious support, right? All-time high, an area where, when price was trading up here for, months, even a year, really, most people you talked to back at that point in time would have told you that, Bitcoin trading back into the all-time high would be a major, major opportunity, right? But now that Bitcoin's actually done that and come down to support, people don't necessarily view it as an opportunity, right? Because the state of the market is different and people's psychology is different. So they're not perceiving the market in the same way that they were previously. But ultimately, we do see, price come down to this level, and then buyers step in, and we see a change of behavior on the monthly. And really, this is what I want to talk about here. You see this, the type of monthly change you would see if the monthly was setting in a bottom, right? So you see that right here, right? When the monthly set in a low right here, it starts taking out the lows here. That's where volatility comes in. I've covered this multiple times in multiple videos, but basically when you have this series of higher highs, and by higher highs, I mean the monthly is trading above the prior monthly trading range, creating new highs, and really not even testing the lows here, but, just going crazy. But, when it does change behavior and start taking out the lows, then volatility comes in. And this, if you were trading the market here, you know how quickly it came down here, and then you get this swing low pattern right here. See the lower wick surrounded by two higher wick lows, then price comes up. Now it starts taking out the highs, closing above. Then you take out the highs, and once the market comes down here and changes behavior, starts taking out the lows, you can see that the state of market delivery changes. And if you're trading here, you also know that price moved very, very quickly down to this level down here. So we can pull this off the chart right there, and you see the same type of formation. A lot of times it's good to talk about areas where it didn't work out, right? You saw that here. Price started creating a higher high, but then you can just look at the higher low, right? Or this area right here. When price came down here, it appeared to be setting in a low. But when it came down here and took out this low, then that's the type of behavior that tells you that actually that's not what's happening in the market. So we want to distinguish between this feature right here and this feature right here, right? When we're creating low, again, it's not a guarantee. Nothing is a guarantee, but there are certain price distinctions that are indicative of a low forming. And one of those being that price stops taking out the lows and starts taking out the highs, especially after visiting an area that we've identified as support, right? Buyers are coming in. Now we hit this level, and there's where your capitulation volume comes in. If we put the volume here, you can see, not that crazy here, but if you were to go down to a daily, you would see that the volume peaked coming into the all-time high. And the volume peaks, and, then we stopped taking out the lows, right? We never took out this capitulation low right here. And we set in this indecision candle, and we ran the highs. And it came down to the open and defended the lows. Now, if we go down to the daily, you can see that here's your capitulation, right? Volume is peaking around the all-time high, capitulation, and then the state of delivery changes, right? Buyers step into the market, change the state of delivery. And this is where people can get caught off guard, right? Because so buyers step in at this level and then create an uptrend, and then you have a market structure break when this low gets taken out right here, and then price comes down. And this is the area where people can, forget, they can lose sight of the big picture, right? So even though you have a daily structure break right there, you're still coming back and testing this capitulation low right here, right, where the volume peaked into the support. So it's one of those where you've got to, for lack of a better term, a lower time frame running into a higher time frame. But again, we really just want to talk about the monthly here. If you were looking for the monthly to set in a low, like we did here when it changed its state of delivery, took that out, what you would expect is for price to continue to defend the lows and create new highs. So one thing that's important, an important distinction that is a little bit nuanced and may not necessarily be accurate is, a lot of times when you get this monthly close, say if the monthly had closed at the lows, right? It had closed at 19,500, and then a few minutes later ran just below and took out the lows. That's not as significant, right? Because that it's really a distortion of the price candle. What you want is some amount of time to occur, right? And it's not clear what amount of time that is, but that's a little bit of a nuanced thing, and it can come down differently for different people. But one thing we can say for certain is that, if this low got taken out, then, that type of monthly structure is definitely broken. But, if a significant amount of time passes, so now we've got this low here, August low right there. Can take everything off the chart except that, just to make this easier to understand. We got the August low right there. If you see price rally off this even a little bit and then come down and break these lows, well, then you're going to, it's a different change of structure, right? As opposed to the contrary, what we'd want to see if the monthly is bottoming, we would want to see, the monthly defend these lows, run up, and create new highs. And a lot of times, it'll do that pretty dramatically, right? And, for whatever reason, these are typically the areas where people start to short aggressively, right? And that's actually the worst place to short aggressively, because that's where you confirmed your monthly low. But if you go down to a daily chart, you can see how somebody in that scenario might be enticed into a short, right? Right here, because you might be like, well, your eyes always drift over here to this side of the chart, right? There's so much resistance above, so how far can it go? Well, it can run all the way up above and stop everybody out above the all-time high, and then run back below these lows, right? People never seem to really price in just truly how much volatility actually exists in Bitcoin. Bitcoin can really can go further than what people expect it to do or what people believe it can do. So those limitations that exist in people's minds don't actually exist in the market, especially a market with an inelastic supply like Bitcoin. But anyway, since we've talked about the monthly, we got to mark off the monthly on the chart. Got our monthly open here, right there. And I'll just go through and mark off each monthly open. So this monthly open was actually our quarterly open. Talked about this before, but a lot of times quarterly opens are pivots, right? You've got your quarterly open here, and then this major downtrend, really one of the strongest downtrends I've ever seen in Bitcoin, got broken when the new quarter opened, went up, then you got your breaking structure right here. I'm just trying to, break this down very simply and not just talk about price action, but also talk about time within the context of price action. So now we had our quarterly open back in July. We'll have a new quarter in October. So that will be an area to look out for too. That's typically an area where you would get a pivot. There'll be a FOMC meeting at some point in September 20th, and then the Ethereum merge in September 15th. So there's a lot of events as we get towards the end of September, a lot of major events in the crypto space, or events that just broadly affect the crypto market. So it's important to keep in mind. But right here, it's very difficult to trade this because you very just a textbook break of structure right here. After this uptrend is broken to the downside. But again, if you just zoom out on the monthly, we're just hanging out around the all-time high, the previous all-time high. So is that an area to really create a short idea? Not really. I mean, the short idea is the big shorts were, back in November and March, right? We had about a 80% correction. Typically is, about what you typically see in a bear market correction. Now, another thing to keep in mind, another way to incorporate the element of time is I would argue that the bear market in Bitcoin actually started back in, well, really the RSI peaked in January of 2021, which is almost 2 years ago, which is kind of crazy to think about. But really the price action peak was here. This was it. And if you guys are following the market, the significance of this date. That the Coinbase IPO went live here. Coinbase, the exchange, went public, and that was really the market top. Yeah, I don't think a lot of people realize that because they think, that the market top was in November, but from the RSI kind of puts that in perspective, right? This is not a bull market. Really, the April 2021 was the bull market top, really. And with that in mind, that means that we've been in the bear market for a very long time, right? It's if you're using this number as your reference, we've been in a bear market for about a year and a half at this point, which is pretty characteristic of the amount of time you would spend in a bear market if you go back to previous cycles. Now, this was a very short bull market, of course. So who knows why that was, but again, just going back to the idea that this is, a bear market, it has been a bear market for a while. These are the type of things where you don't realize you're in a bear market until, you've been in it for a while, right? Of course, people, identify that we were in a bear market when things like this happen, right? When you get the final last leg down, right? But before you get that final capitulation, people don't really see it that way, right? They're still, on the wrong side of the market, and myself included too. I've definitely been bullish at inopportune times and bearish at inopportune times. But one thing that helps is, just maintaining a set of probabilistic outcomes, meaning that, if price is extended this far, the risk reward set up on a short is not ideal in that scenario, and you'd want to see a different kind of setup. Now, of course, people will always be biased to think of downside in Bitcoin think of risk in Bitcoin to the downside when they're denominating their account in USD, right? Because, theoretically, Bitcoin could go lower. And if you're managing risk in USD, then you want to make sure that you don't lose USD value. And I really think that that might be the one thing that gives people the most amount of trouble, because over a long period of time, Bitcoin as a unit of account generally just goes up, right? So if you use it as your unit of account, that'll be more beneficial than not using it as your unit of account. And it can also help you manage risk. And it changes the way you see risk management. If you're using Bitcoin as your unit of account and thinking in terms of the Bitcoin standard, right? And another way to think about it is if you're on the Bitcoin standard, right, and you denominate in Bitcoin and you don't have any in your just own Bitcoin and you don't have any leveraged exposure, well, how do you manage risk on that position? That, you if you're on the Bitcoin standard and you don't have any leverage and all you have is Bitcoin, there's no way to manage risk, right? It's a different way of thinking, right? To think that, just, having a Bitcoin denominated position is a low risk position. It's very different to the way a lot of people think. I think it's a beneficial way to think. But of course, Bitcoin is highly volatile. And if you enter a large amount of fiat currency at one point in the market, a singular point, and pick a point, the odds of you picking the bottom is very low. So I understand that, right? If you do that and make that lump sum investment, then it's going to take a long amount of time for you to be vindicated. But so I think the best solution to that is to stay on the Bitcoin standard and take whatever cash flow you have and denominate that in Bitcoin and convert it. So, people call that DCA, right? But the point is, one way you dampen volatility is by DCAing into Bitcoin, right? And the flip side, right? In order to make sure you have a large amount of cash flow in the future, when Bitcoin is going up parabolically, you want to have some type of distribution plan to, take profits off and, secure that cash flow for the times when Bitcoin goes down. I know I'm kind of contradicting myself there, but the idea is that, uh, that maybe not 100% Bitcoin, but some highly uh, high amount of Bitcoin allocation is going to be, at the end of the day, the low risk position. And I think that's the paradigm shift that a lot of people haven't caught on to. And when that idea catches hold on some of the larger asset managers, it's going to be pretty revolutionary. I think, that is actually taking hold at BlackRock. It's already taken hold of Fidelity. And these are some of the largest money managers in the world. The only person missing there is Vanguard. But, Fidelity and BlackRock if they're doing it, then I'm sure Vanguard will do it. Actually, thinking about uploading a video on the BlackRock 2020 investment perspective. They just released their thesis, and it's heavily Bitcoin centric. So, yeah, I don't know when I'll upload that video, but yeah, just keep an eye out for that. And yeah, if you just make sure to subscribe to the channel and leave a like on the video, and I'll catch you guys in the next upload.